Hey everyone, it's Monday morning, May 19th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. It's going to be a busy one, so let's get straight to it. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, let's start with the big picture. Investor confidence has picked up big time. Last week, the S&P 500 jumped 5.3%, the Nasdaq soared 7.2%, and the Dow climbed about 3.4%. That means both the S&P and the Nasdaq have now completely wiped out those losses from April's tariff shock, and they're both up for the year. The number one story driving markets right now? It's still tariffs. The announcement of a 90-day pause on tariffs with China lit a fire under stocks, and now a lot of strategists are turning more bullish. President Trump said Friday that the U.S. will finalize tariff rates with trading partners in the next few weeks. That's keeping the market on edge, but hopeful. Some are calling this a possible turning point. Tom Lee at Fundstrat still thinks the S&P could hit 6,500 by year-end, if these deals actually materialize. But others are being a bit more cautious, saying it's still too early to celebrate. Negotiations are ongoing, not finalized. And that uncertainty? It's still hanging over the market. Now let's talk about the Fed. Because while investors are watching trade talks closely, they're also watching the Fed's next move. After last week's developments, the market is betting that the next rate cut will come in July, not June. In fact, now traders only expect 2 rate cuts this year, down from 3 just a week ago. Even with 9 Fed speakers lined up this week, don't expect fireworks. Most economists, like Aditya Bhav over at Bank of America, think we'll hear more of the same. Patience, wait and see, data dependency. He even thinks the Fed might not cut at all in 2025, unless inflation truly cools or the labor market weakens, and honestly neither of those seem likely in the near term. So, even though the Fed isn't rushing to cut, markets haven't really blinked. Risk appetite is back, and optimism around U.S. growth is fueling that rally. And speaking of rallies, let's talk about big tech. For most of 2025, the Magnificent Seven were more like the lagging 7. According to DataTrek, those 7 stocks, Apple, Alphabet, Microsoft, Amazon, Meta, Tesla, and Nvidia, were the reason the S&P 500 was down in Q1. Without them, the index would have actually been up about 2%. But recently, that's flipped. Since May started, those same stocks have accounted for 60% of the market's gains. Nvidia and Tesla are both up more than 30% this past month, and Microsoft's up about 20%. Goldman Sachs even raised its year-end S&P 500 target from 5,900 to 6,100, thanks in part to the tariff pause and strong earnings from big tech. David Kostin over there thinks AI-exposed stocks are still super attractive, especially since their valuations aren't crazy right now and growth looks steady. Alright, so what's on the calendar this week? It's a bit quieter on the data side. We'll get updates on manufacturing activity and the usual Thursday read on jobless claims. On the earnings front, most of the big names are already done, but keep an eye on results from Target, Home Depot, Palo Alto Networks, and Workday. That's it for today's Capital Markets Quickie. Stay sharp, stay informed, and let's see how the week unfolds. Catch you next time.